Welcome to Financial Odyssey and welcome back, Odyssey Navigators. This is where your journey to wealth and wisdom begins. Also hit that like button and subscribe to my channel for more content like this. Now let's get this party started. Ever wondered how successful businesses keep track of their financial performance and make informed decisions? Today, we're going to delve into the world of profit and loss reports, a powerful tool used by businesses of all sizes, from corner shops to multinational corporations. This report, often known as an income statement, is a fundamental part of any business's financial management. It provides an overview of revenues, costs, and expenses over a specific period, offering a clear picture of a company's financial health. Whether you're a seasoned business owner, a budding entrepreneur, or an enthusiastic learner, understanding how to create a profit and loss report is an invaluable skill. Excited yet? You should be. Have you hit the like button yet? Go ahead and do that now. I wait a little because we're about to unpack this seemingly complex process into manageable steps. So hold on tight as we are about to dive into the process of creating a profit and loss report. The first step in creating a profit and loss report is gathering all of your financial data. Now, this might sound like a daunting task, but trust me, it's easier than you think. In fact, it's just like piecing together a financial puzzle. And who doesn't love a good puzzle? Firstly, you'll need to identify your sources of revenue. This typically includes sales income, but can also incorporate other streams such as investments or miscellaneous income. Remember, every cent counts when it comes to your bottom line. Next on the list are your expenses. These are the costs incurred in the process of running your business. They could range from the cost of goods sold, that's the direct costs tied to the production of the goods sold by your business, to operating expenses such as salaries, rent, utilities, and even marketing costs. Don't forget taxes. They too form a significant part of your expenses. Now, it's not enough to just jot down these numbers. You need to organize them into categories. This will not only make your life easier when it comes to creating the report, but also provide a clearer picture of where your money is coming from and where it's going. Divide your revenue and expenses into categories that make sense for your business. This could be by department, product line, or any other breakdown that suits your needs. Collecting and organizing your financial data is a critical step in the process. It's the foundation upon which your profit and loss report is built. It's like the blueprint of a building, guiding you to construct a solid, reliable structure that stands the test of time. Remember, the quality of your profit and loss report is directly proportional to the quality of your data. So take your time, be meticulous, and ensure that your data is as accurate as possible. With all your financial data at hand, you are now ready for the next step. Stay tuned to find out how to take this raw data and transform it into a comprehensive profit and loss report that can guide your business decisions. The second step in the process is calculating your total revenue. Now, what exactly is total revenue? Is the total receipts from selling a particular quantity of goods or service. Is the total income of a business from its activities. But how do we calculate it? Well, the calculation is pretty straightforward. It's about adding up all the different sources of income. This is not just limited to the sales of your products or services, but it extends to other forms of income as well. Consider this. You own a coffee shop. You sell coffee, pastries, and perhaps some branded merchandise. Each of these constitutes a separate stream of income. So your total revenue would be the sum of the income from coffee, pastries, and merchandise. But what if your coffee shop also has a little corner that you rent out for local artists to display their work, and you receive a small commission on any art sold? This too is a source of income and should be included in your total revenue. And let's not forget about investments. If you've invested some of your profits back into the market and have earned dividends or interest, that's another stream of income that should be added to your total revenue. Simply put, total revenue equals the sum of sales revenue plus investment income plus any other form of income that your business generates. So you see, calculating total revenue isn't just about adding up the sales. It's about taking into account all the ways your business generates money. Remember, accurately calculating your total revenue gives you a clear picture of your business's gross income before any expenses, costs, taxes, or any other deductions are taken into account. It's the first step in understanding your business's financial health. Now, you have your total revenue, but what do you do with it? Let's find out. The third step is finding out your gross profit. This is where we start to see the fruits of our financial labors. But what exactly is gross profit and how do we calculate it? Well, gross profit is simply your total revenue minus your total expenses. It's the money left over from your revenue after you've paid the direct costs associated with producing and selling your goods or services. For instance, if you run a bakery, these costs might include ingredients, baking supplies, and wages for your bakers. Now, how do we calculate this? It's straightforward. You start with your total revenue. That's all the money coming into your business from sales and other income streams. From this, you subtract your total expenses. These are all the costs directly related to your sales, like the cost of goods sold. The resulting number is your gross profit. Let's say, for example, your total revenue is $100,000 and your total expenses amount to $60,000. By subtracting your total expenses from your total revenue, you end up with a gross profit of $40,000. But what does this number tell us about our business? Gross profit is a key indicator of your business's basic profitability. It shows how efficiently your business is using its resources, like labor and supplies, to produce its goods or services. A high gross profit suggests your business is running efficiently, while a low gross profit might indicate potential issues with production costs or pricing strategies. It's important to remember that gross profit doesn't account for other operating expenses like rent, utilities, or marketing costs. These will be factored in when we calculate net profit, which we'll cover in the next step. So you've now calculated your gross profit. You're getting a clearer picture of your business's financial health, but there's more to understand. You have your gross profit, but we're not done yet. Let's move on to the next step. The fourth step is determining your net profit or loss. Now that you've calculated your gross profit, it's time to take a closer look at your business's bottom line. To do this, you'll need to subtract any additional expenses that weren't included in your initial calculations. These can include marketing costs, rent, utilities, and any other costs associated with running your business. Let's say your business has a gross profit of $50,000. However, you spend $10,000 on marketing, $15,000 on rent, and $5,000 on utilities. To calculate your net profit, you would subtract these expenses from your gross profit. So $50,000 minus $10,000 minus $15,000 minus $5,000 equals a net profit of $20,000. But what if your expenses exceed your gross profit? In that case, you would have a net loss. For example, if your gross profit is $40,000, but your expenses add up to $50,000, you would have a net loss of $10,000. The net profit or loss is a key indicator of your business's financial health. It shows the actual amount of money your business is making after all expenses are accounted for. A positive net profit indicates that your business is making money, while a negative net profit or net loss means your business is spending more than it's making. This information is crucial for making informed decisions about your business. For instance, if you find that your business is operating at a loss, you may need to find ways to reduce expenses or increase revenue. On the other hand, a healthy net profit could indicate that it's time to invest in growth opportunities. Remember, the goal is not just to make a profit, but to make a sustainable profit. That means earning more than you spend, not just today, but over the long term. Now you know your net profit or loss, but what's next? Let's dive deeper. The final step in our guide is reviewing your profit and loss report. Now that you've meticulously gathered your financial data, calculated your total revenue, gross profit, and net profit or loss, it's time to take a step back and look at the bigger picture. Just like a doctor reads a patient's health report to diagnose issues and suggest remedies, you, as a business owner, need to analyze your profit and loss report. This document is a mirror reflecting the financial health of your business. It brings to light the areas that are performing well and those that require attention. A good starting point is to evaluate your net profit or loss. If there's a loss, don't panic. It's not necessarily a sign of failure. Instead, it's a signal for you to delve deeper and identify the areas causing this outcome. Perhaps your operating expenses are too high, or maybe your sales revenue is not meeting the set targets. Whatever the cause, the solution lies within the report. On the other hand, if you're seeing a profit, congratulations, but don't rest on your laurels just yet. Analyze your report to understand what's driving this profit. Is it due to high sales revenue, or have you managed to keep your expenses low? Recognizing these successful strategies will help you continue on this profitable path. Remember, the profit and loss report is not a static document. It changes as your business evolves. Therefore, review it periodically, not just at the end of the fiscal year. Frequent check-ins will help you make timely adjustments and informed decisions. Also, consider comparing your current report with previous ones. This comparison will give you insights into your business's progress over time. Are you moving towards your financial goals, or are you drifting away? The answers lie in the trends that these comparisons reveal. With this, you have created and reviewed your profit and loss report. But remember, this is just the beginning of your financial journey. Keep learning, keep analyzing, and keep growing. After all, the road to wealth and wisdom is a journey, not a destination. Keep navigating and you'll find your path. Congratulations! You have successfully created a profit and loss report. Guake kamai. We've journeyed together through the process, breaking it down step by step, making it easier for you to grasp and apply. We started by gathering all the necessary financial data, including sales revenue, expenses, and other income. We learned the importance of organizing this information into categories such as operating expenses, cost of goods sold, and taxes to make calculations easier and more accurate. We then focused on calculating total revenue, which involved adding up all sources of income, including sales, investments, and any other money coming into your business. This figure represents the total earnings of your business before any costs are taken into account. Next, we subtracted total expenses from the total revenue to calculate the gross profit, giving us a snapshot of how much money your business is making before factoring in other costs. We followed this up by subtracting additional expenses such as marketing, rent, and utilities from the gross profit to determine the net profit or loss. This critical number showed us how much money your business is genuinely making after all expenses have been accounted for. Finally, we took a moment to review the profit and loss report, using it as a tool to analyze your business's financial health and make informed decisions moving forward. Now, it's your turn to put this knowledge into practice. Keep track of your business's financial performance and let the profit and loss report guide your business decisions. Ensure to keep this information accurate and up to date, and you'll have a clear understanding of your business's financial health. Remember, understanding your finances is the first step towards wealth and wisdom. Stay informed, keep investing, and ensure your future security. Until next time.